Okay, now let's do a YouTube mic check once again. Let me just share the link to you so you guys can just help me paste it. Yeah, all right, nice, cool. Welcome back, everyone. I don't have as complex a setup as Don does, but yeah, I think the format we're gonna go with is we're still gonna be answering questions on YouTube and Zoom. I think occasionally if like currently there's only 30 people in here, so we're good for now, but if we start like getting like above 100 people or whatever in terms of capacity, we'll try to select some and then maybe the mods will paste some of the questions into the Zoom and then we'll just go through them. But I think just gonna, yeah, so is everything good now? We all good? Let me move these boys over here. Welcome. Cool, cool, cool. Yeah, I think so. Hustle, you mod? Type something? Jesus. Okay. Okay. Nice. All right, so welcome everyone. Um, yeah, as usual, we're just gonna be answering some questions on YouTube. No different to what my stream normally is, really. But yeah, do we have any Zoom questions actually? I feel like we didn't really get towards Zoom questions yet. And if you guys see any good questions on the YouTube, just get them on. Oh, wick entries and liquidity. Explain how you enter a trade, basically. Okay. Um. Okay. Let's think about how it's best. Jesus. Sell now is good. You have a 4 hour no bottom wick. Can't wait to sell now and then just get a fake out to go up. But um. Oh wait. How do I unmute? Wait. All right, the boys. Anyway, so wick entries, liquidity. Let's try to explain that. So typically, how I try to explain this is, when you range, right? Let's ignore everything to that side. When you say you're in a bearish um, trend at the moment, right? So you come down, you hit this kind of level of support, start ranging here. Let's say you break down, right? And so you're basically in a bearish trend, right? But let's say we're ranging here constantly and we're failing to break this level, right? What is that indicating? That's indicating to us that price does not have enough liquidity to continue the bearish motion, right? To continue further down to break past this level because it's a strong level of support. So what we're looking for typically is either a liquidity grab somewhere in these sorts of areas, right? Or a breakout and then liquidity grab to continue down. The reason for the liquidity is because we don't have enough to break out of the range, right? So typically you'll see either this play out, which is a breakout, then a smaller liquidity grab, which maybe in sort of like these sorts of areas or whatever. But sometimes you'll get this where you have a range and then a second range, and then just a higher, a much stronger liquidity grab before you're able to break through. So that's what typically we've been seeing, right? So in both cases, you don't have enough liquidity to drive down to fill the next range. In case one, you have a breakout, so you maybe have enough liquidity to break out, but then you need to grab liquidity to fill the range. So you get a smaller liquidity grab because you've already broken out. So you don't need all of that liquidity. Whereas this case, you don't even have enough to break out. So you grab the liquidity here to come down. And what this typically looks like, right? These two kind of boxes here, what these typically look like are fake outs. So what you'll usually see is, So like for example, in this case, right, you'll see a bullish candle like this. Sometimes we'll have a top wick, sometimes it won't, right? But then you'll get a closure back into the range, right? And that as that happens, we'll be looking for break below. Depending on how high this is, we might be looking for a top wick to break this to come down, or potentially even off rip to come down, or maybe the flip, right? So that's what we're looking for in this case. In this case, you just haven't broken this, but the same thing applies, right? I'm just moving this up to here instead. So you get a kind of overall range starting to go up, and then you get a fake out to come down. And then once you probably close down here, you understand that you're definitely in continuing that bearish trend, but we can look for those wick entries towards these areas because we're expecting this to be some sort of fake out to come down, right? Especially if this is one candle push. So what's that going to look like? So something like in this case, right? If just it closes, let's say bullish like this, right? After a bearish candle filling the range, something like this, right? And then your next candle, right? Maybe, actually, let's draw a couple more candles so it makes more sense. So you come to here, you fill the range, and then now you're respecting this candle. You're closing respecting this range, right? You haven't filled the entire range down to here as well. Next candle, if this now comes up to these sorts of areas, right? Even if it's a closure, typically you'll see a very strong push, potentially no top wick or very small top wick, right? And then as that happens, we'll be looking for wick entries to come down and do something like this. So we're just identifying where this level is likely to be at and then taking those entries around here. Mic volume is low. Well, that's just too bad. That is not my problem. It's all right. It's all right. I think it's because you guys are on Zoom, but it's fine. Yeah, I hope that makes sense. You have a psychological question. Tell me when you're done. Okay. Well, that's not very helpful, right? If I have a breakout candle, oh, there's some on Zoom. Cool, let's have a look. How to go about trading lower time frame, 1 hour and 4 hour, while price being at a crucial higher time frame. Okay, only take the one side of the higher time frame is pointing at. The daily bias is bullish in this scenario. Doesn't mean I should only be looking for buying positions on the smaller time frame. Okay, I would say there's like no matter where the daily closes or the higher time frame closes, we're still looking for buys and sells most of the time, right? Unless some very high time frame liquidity has already been tapped, right? So for example, let's say let's try to clear everything. Let's look at price currently, right? So we're understanding that the last time price was in these sorts of areas, right? We're looking to, I would say, mainly mirror these sorts of areas, right? We've come up from these areas, right? So generally, previously we were quite bullish, right? We were respecting all of these areas. So in the case where, you said if the daily bias is bullish in this scenario, does that mean I should only be looking for buying positions? Not necessarily, right? Because, for example, your daily here, so let's get a replay back to here. In this case, your daily closed like this, right? But it's respecting this this overall area, I would say, towards towards here, right? You're respecting these sorts of areas, right? You have wicks here, you have like rejections here, support here, right? So in general, it's respecting these areas, which indicates that you don't necessarily have enough liquidity to continue to drive to break past this range, right? So in that case, yes, I'm bullish, right? But I'm bullish understanding that at any given point, price can just come straight down because it needs to grab liquidity. Where is it going to grab liquidity? I don't know, right? But looking left, where is it likely to grab liquidity? Somewhere within potentially these areas, right? These areas, and if it wants to break this to grab even more liquidity, somewhere in these areas, right? Or even continuing down to like these sorts of areas here. So that's kind of generally what I'm looking for. Yes, I'm bullish, right? Understanding that, last previous couple candles have been bullish. I think the weekly at that point was bullish, but if it's closing respecting like that, I'm just in the back of my mind, I'm understanding that there is a high chance you will need to grab liquidity to break this range. So I'm still looking for the buys to go up, but only after grabbing liquidity. And I'm looking for the sells to come down to, to grab that liquidity, right? To get to those liquidity points where we're able to then push above and then break and then continue the bullish motion up. But yeah, I'd say that's essentially that. What else? What else? I think that's a good one because Don was actually experiencing this like not too long ago, right? I think we were on a massive, massive win streak, as we are currently still. But then I think on the signals, I think we may have taken one loss. Um, and then it's just like, oh wow, he hasn't taken a loss in such a long time. Like, how does he suddenly deal with it? But then you kind of just go back to basics. Like, would he have taken the trade again? Right? Absolutely. The trade made sense. 100% made sense when he took it. So he's going to take the exact same trade again if he sees the exact same opportunity. So that just kind of goes back to like, how do you deal with, worrying if you're going to lose? Well, we don't worry if we're going to lose. We just take the same positions. And then if it is a loss, it's a loss. If it's a win, it's a win. If it's a break even, it's a break even. But we're taking the same thing every single time. So it doesn't matter what the outcome is almost, right? Obviously, we'd like it to be a win because we're trying to, have a high win rate and then make, so make some pips, right? But in general, if we're trying to exploit the market for, positions for us to kind of take advantage of and make some profits, we're just looking for inconsistencies in the market that make sense every single time. So the setups, the entries, the timeframes and everything. So therefore, I would say, there is a level of, controlling, your win streaks and then your emotions as you're going into win streaks as well as your emotions into loss streaks. But generally, I would say there's not too much that you can do besides making sure that the quality of your entries, your setups, and everything is good. Once that happens, you'll worry a lot less about is that like, oh, am I going to get into a loss now? Am I going to get into a win the next one, right? But generally, I would say that's that. Let's have a look. Let's have a look. Yeah, no worries, Michael. Do I trade with supply and demand? No, I trade the DonVo strategy. Um, and there's a playbook. I really need to get my Nightbot set up with all the playbook stuff, so that it just like automatically sends. But I'll do that later. You're at Wix? Yeah. Nah, that's alright. It's alright. Just Wix. Wix is the topic. There's like the last like what 20, 30 messages are all just like, oh, Wix, Wix. Ah, is that on the Zoom? Advanced sharing options? Fantastic. Right, right. Anybody say something? Let's see if they can hear. Can you guys hear? No? IT support guy. Yeah, man, legit. Right. Can you guys hear everything now?
Okay, cool. Man, streaming is not. Can you guys? I mean, Hus, are you on the stream as well?
Yeah.
All right. Okay, I think we can hear. I think we're good.
Jack is fine with no sound. Jack could just sign language his way through a stream.
I only have one sign language move wicks. Do you know it?
Yeah. It's pretty famous. I don't know how you got the whole world using it. Alright. It's
Can
not
I-
the thing where I swear somebody pulled a jack. Somebody pulled a jack on me like an hour ago on the road. I swear.
Why? What did you do?
What I do, I reversed through a red light at full speed.
There we are then. Oh, that's normal.
All right. Somebody asked a question about no wicks. Cool. So let's draw hourly candle. All right. Let's just draw one hourly candle, and I'm going to draw some 15-minute candles. So how do we explain this? Let's say we're bullish, right? Let's say our hourly candle is like this, right? When you break this down, I guess, you know, like the hourly has a top wick here, right? So when you break this down, you know, you might have started off something like this. You've created that bottom wick, you've came up, right? All the way to here, and these are your 15-minute candles, right? You've closed above on this, but then your 15 maybe closed below, right? So back into this range like this. So this would make up an hourly candle, right? In case 2, where we have a candle with no wick, we have something that looks like, let's say like did something like this. Alright, so if we break this down, same thing, you have potentially something like this, right, this, and then as it's coming up to create that final 15-minute candle, maybe you just have something that's like this, right? Or this, or you could say you could have something which looks like, actually, where this candle, let's just draw the whole thing again. So 1, 2, actually I'll just keep this. Yeah, so these are kind of like your no top wick candles, right? So we understand that when price wants to go up, in this case we're bullish, right? We typically see the market do something like this, right? Ups and downs, higher lows, higher highs, and whatever, right? So this is in line with what we're looking for: higher highs, higher lows, higher highs, higher lows, higher highs, and then a higher low right here. And this retracement is just part of the structure to go up, right? Whereas in this case, we're creating higher highs, right, constantly, and then we finished the hourly at a point where it is a higher high. And what does that mean, right? What does this mean? So it means that there's a higher chance, right, that the next movement of price is going to be a retracement before you're able to go up, right? Just because we're following market structure. So in this case, I would say, I think we always say that there's about a 50-50 chance that there's that price can come down, and that's just not something you want to take, right? For example, if you want to get into a buy here, but you're understanding that, okay, there's going to be this pullback, then why not you wait for the pullback, then you get a closure above this area for you to then take the buys above, right? Because this top wick, this no top wick, indicates that there's a higher chance that there's going to be a pullback. I don't know where to, right? Just a general pullback before you're able to retest those highs. And in this case, where you have a top wick, you've already done that. So there's a higher chance that this next candle is going to start going up, right? Even if you get like a small bottom wick, you're going to start going up. Or in this case, you don't know where that bottom wick's going to be, right? This could come down all the way to here before flipping. So if you put like say you had a buy right here off the rip, and your stop loss was like down below some of these 15-minute candles, you could get stopped out. So why not just wait for price to show you that it's going to continue bullish momentum, right? Asian session stream today, I think it's
Private.
yeah, private only, guys. But if you guys want to trade Asian, then just join up Wix's table, I think it is.
Yep.
Do you like order blocks? Can I explain more about fake outs? Yeah, fake outs. So fake outs, I love fake outs. So let's say we typically see fake outs which are against the current market trend. So for example, right, let's say we're bullish again. All right, we've come up from these areas. right? And then let's say we had a candle respecting, we're getting a celery, oops, that's weird, some fat candles, all right, something like this, and then you started to go up, you filled the range, right? But you didn't break out of the range, so you're just kind of hovering around these sorts of areas. You've come back, filled the range, you're respecting, and you come up again, right? You're just generally showing that you're respecting this area, right? And then at some point, price just decides to come down, right? Just come down below here, right? Potentially even below here, right? As it's doing that, we're understanding that the last candle respected this support here, right? Respected this level here. So, and it hasn't filled the range up to these sorts of areas, right? So what we're looking for is that, okay, generally when price, moves, you get, structure that's like this. It doesn't always follow this, right? It needs to grab liquidity. So typically what you will see is actually something that looks more like this. So you range, oops, let's say you range like this, right? And then you don't have enough liquidity to go up, so you grab liquidity to go up, right? And this is because you want to break out of 2050 or whatever this is, right? Whatever the top of this range is, but you don't have enough liquidity to do that. So this is typically what we see, a liquidity grab, which is also a fake out. And in this case, when I draw it out in terms of candles, it's going to look something like this, right? We have something like this, and then you get a continuation of price. But this, after this, right? After this happens, we're looking for potentially a flip of this candle or a breakout above this range to start retesting those highs. Why? Because it's already grabbed liquidity. So if it does want to come back down, right, that we'll typically, I'd say we'd have our stop loss around here or like the next kind of low around those sorts of areas. But you've broken all of these lows here to then break the highs. Price doesn't just typically, break lows, break highs, break lows, break highs constantly, right? Once you break these lows, and then you break the highs, there's no reason for price to drive all the way back down again. You've also closed back into this range. So if you took a flip here, right, you're looking to be break even here because this is your advantage point, right? It's going to fill this range. Once it fills that range, it can still do anything it wants, right? It can still come all the way back down. But we're understanding that after you grabbed all this liquidity, it's normal, right? Like what we've been seeing is that you're going to fill the range and likely continue the bullish momentum to go up. So these are kind of fake outs, and in fake outs, if I draw it in terms of a line, it's just liquidity grabs. Those are the same things. Isn't that a pineapple? That is not a pineapple. A pineapple. So a pineapple is just another trade that you'd enter at a better price point. So for example, right, you entered a trade in a long position. Let's say you entered like, I don't know, like here. Once you, let's say this wick just broke this high and you're aiming to target some random thing here, but then your stop loss was actually going to be below certain areas here, right? You're understanding that here currently there's liquidity being grabbed, so you've entered a pineapple potentially somewhere around these sorts of areas for a wick entry, or as it's coming up, you potentially wanted to enter a second position as it's flipping to go up, right? Because you've got that extra confirmation. But I would say pineapples are usually when price is currently against you, but you're understanding that it might be a liquidity grab or it might be some part of the move that you're expecting, so that you can take advantage of a different price point, so that if price was to go against you, you could go out, exit at break even somewhere in between. So it gives you options. It's just strategic to enter pineapples. But pineapples, again, it depends on different levels, right? So make sure you understand what play you're part of, what you're trying to capture in the markets, and then after that, judge your pineapples accordingly. Do we have any more Zoom questions?
Decide a particular time to trade and not take anything outside the whole day, or look for trades all day sitting in front of a screen, assuming you have time. What do you think? Just ask yourself. Somebody asked you that. Right? The thing is also, like, your moves can play out during out of volume times. Your setups can set up during out of volume times, but the moves won't play out. Right? You're likelier to get a fake out during market. Anytime you're breaking out of the range, that's volume. So you'll see a lot of times, even for Asian session, you'll see us set up maybe at like, and that won't be the move. We won't drive pause. It'll range or at a support or a resistance, and then as soon as the next volume comes in, market open, then it drives in your direction. You're like, wow, it took that same position 2 hours ago. It didn't run. Now it runs because there was no volume. So yeah, you don't want to sit there all day. You want to trade your market high volume hours, and that's it.
Yeah, that's why people just typically trade 3 sessions, right? Asian, London, New York, because that's when you typically get volume. Outside of volume hours, it's difficult to trade, or you just might be sitting there for ages and nothing's playing out.
Or your position might play out. You'll just be in either drawdown or just won't run. You'll hit stops, they'll go against you, and then it'll run when the time is right.
When there's volume, yeah.
How many times you've taken a position only to see it run like, way after your position played out, like a couple hours later. It was the right breakdown. You just didn't account for the fact that there might be no volume for it to drive.
Yeah, exactly. Happened to your Friday? Yeah. Happens to the best of us. Thoughts on increasing position size of pineapples? For example, first position is 2 lots. Again, that's more of a risk management question, right? Depends how you use your, like, for example, right? If you're taking pineapples, right? Potentially your pineapple will have smaller stops because you're using the same stops, right? Because it's the same trade idea. But so your stop loss would be the same, because if it hits that point, it's probably gone, right? So if that is the case and you want to risk the same amount, then maybe your lot sizes will change. But that's a risk management point of view. That's more of a question that, like, for example, if we use fixed lots, we're going to use the same lot sizes for any pineapples that we have, right? But if you're trading based off your stop loss size, then maybe your first position will be 2 lots, your next position might be 5 lots, right? But just think about how you're managing that, how you're going to be managing all the your risk, right? And how much, like, your risk to reward if you're trading that and whatnot. But generally for us, I would say, I can speak for Don and myself. I don't know about Wix or anybody else who trades, but I think we typically use standard lot sizes more, just the same lot size for most positions. Not to say that it's wrong, right? Not to say that you can't use various lot sizes, but that's just what we use. Can I explain more about advantage points? Yes. So let's clear everything. Cool. I mean, is there something? Yeah, cool. I mean, price currently is not bad on the daily, right? Let's just use the daily. Imagine this was like an hourly chart or whatever, but doesn't really matter, right? So currently the daily has closed below, I would say, a certain area of support. So we're understanding that every time price closes below here, including this, celery here, you had this respecting all of these here. Every time you close below, you tap to the next level of support, or wherever it wants to go. So here you have a breakout, and then you closed down all the way to here. You drove down to there. In these cases, you drove down to these sorts of areas. And generally, I would say your next area that it will generally tap, right, is probably, I would say, around here, right? So, and why is it here, right? Because you have, some support here, some wick rejections here, right? In this case, you also have some support. You have loads of wick rejections. So that's where I'm typically, gonna put my level every single time. So now that we got a breakout into this range, we're looking for potential liquidity, because obviously the daily time frame, right? So we're looking for some level of liquidity, right? And then a flip potentially to continue down. And once you get that, right, let's imagine this whole range. Let's imagine this range was like 20 pips or whatever, right? So I'd be looking to go break even towards these sorts of areas, right? Understanding that every single time price tapped into these sorts of areas, it had some level of decision that it made, right? And where is that based off of? That's based off of this, right? Based off of this, based off of this, based off of even these wicks here, right? So once you tap into these areas, right? Again, this is the daily. I appreciate that, but just imagine this was like a lower time frame chart. But like once price taps in these areas, I'm probably going to go break even or close off most of the position, because at any given point you can do exactly what this did, you know, close respecting and then start driving up to grab more liquidity before it being able to come down. So I want to take advantage of what I can, right? And then once it taps into this, which is what we call an advantage point, price can do whatever it wants, right? We're pretty certain with a high confidence level that price is going to drive to our advantage point. And once it hits there, we don't want to predict where price is going, right? We just want to understand that, okay, we've you know, the confident play that we were expecting has happened. So we're going to take advantage of that and we're going to exit, right? We're just going to let price do whatever it wants, right? If it wants to run, cool, well, then we have a runner. If it wants to then, you know, hit our break even, then cool, it hits our break even, right? But at that point, it's not, we don't have to worry about the trade anymore.
Yeah, people tend to forget, like, people always look for the best case scenario. We need to look for, like, what is a worst case scenario. And that's why you go break even, right?
Yeah. No worries. Should trade before news or after news? It's up to you, man. Like, if you really want to trade news, that's on you, man. But we don't trade news. You know, there are a bunch of news traders out there, but we're not one of them. Whole DVS squad is still working hard, even pre-market. Yeah, man, we're trying to deliver. Is it better to have 1k euros private account or go for challenges? It depends how much experience you have. I would say there's advantages of both and there's disadvantages of both, and it also depends on your experience, right? If you're just coming to the markets and you have 1k that you're willing to, you know, like lose, then in terms of learning, I would say you'd learn more on a live account and not a challenge, right? Because I think like 100k challenge is only like, it's like 200 something euros, 300 euros, right? And if you lose all of that, like, you'd think, oh, okay, I haven't actually lost 100k, right? You've only lost 300. So there might be some sort of like false learning there, whereas if you actually lose the whole 1k, then you understand that, okay, you don't know how to trade, right? Especially if you're new. But say you have 2-3 years worth of experience, right? You're then coming to the markets, understanding that how this 1k could actually be the most like beneficial for you. Then maybe you buy like 3 or 4 different challenges, right? With the 1k and the knowledge you have about the markets and how to trade. And at that point, maybe the challenges makes more sense, because the 1k in terms of a monetary return is not as high as the challenges. But the challenges, obviously, you have to know how to trade. You have to pass phase 1, phase 2, and after that, you're able to take profit split, right? So it just depends. I don't know. Huss is the funded guy. Do you have anything to say?
Oh yeah, but definitely, I agree with that though. Like, start off with a live account first, because the thing is, if you can trade a live account, well, you can, if you like, depends on your strategy where you put your stops though, but you can still break into the funded account stuff. And then there's some people that just go straight for a funded, and then they just end up blowing it because they just don't take it seriously, and then they end up spending more overtime on the challenge fees than they would have if they just went on the live account in the first place. So what I would say is start with a small live account, then if you get consistent with that, use the profits from your small live account to work your way up with the fundeds. And then that's like, when I first got my one, I got a 25k or 30k, whatever it was, and then I use a payout from that to get the 50, and then use that to get the 100. And that's how it's basically the cycle that helped me the most, I guess.
Yeah, 100% agree. We're not getting too many questions, which is new. It's good. I mean, if you guys, what? Why is what?
That was a boxing ring square.
Yeah, if you guys have any more questions, feel free to pop it in. We don't have too many Zoom questions at the moment, so. What's your thoughts on volume profit, footprint chart, and order flow? Man, those are some interesting terminologies that I've never heard in my life. You need wicks them? Alright, wicks, hit them with some psychology or something.
I don't know, but let me talk about this. What I've been doing a lot lately is taking these positions here, because just to finish off the range, I've been looking at the logic of what we're doing, and the chances of us hitting this level are a lot higher than the chances of us hitting this level as we're coming down in any of these drives down. And what happens is, for our trade to play out, for us to get a W, we need to hit this level. So the question that I'm asking myself is, if this is a lot higher probability, or we're a lot likelier to hit that than we are to hit this, but we need the second one, right, the bottom one, for our trades to play out. How do we get into trades where this, the much more likelier probability here at 1940, is our target instead of this? So a lot of things that I've been doing have been just to finish off the higher that we know we're going to tap in order to set up our trade.
Yeah, for sure.
If that makes sense.
Yeah, I think I was looking at that as well. Like, I was pretty certain this was going to get tapped. Like, you know, even 1935, these sorts of years, we don't know, right? But 100% 1940s
But
we get
at
tapped.
least here, right?
Yeah.
So how do we finish off the higher time frame ranges? And a lot of the things that we've been doing on the Asian session for the last couple of weeks, last 2 weeks, I think, we've been finishing off the range, and that has been a reason for a large amount of runners. We've had, like, I think 5 or 6 runners in the last 2 weeks. So just go, because we finished off the range, and as it finishes off the range, it'll either come back on you and you're break even by the time it comes back on you, and you realize it just bounced off to really at a higher time frame level. But you give yourself enough of an advantage point where this finishing off the range is 10, 15, 20 pips at least. But when it's been doing that with volume, and lately it's been volume times all across the board, candles are bigger, you know, you're getting a lot more pips per range. It's been, you know, it enters the next range and drives through it.
Yeah.
That's what we've been seeing a lot.
I think a lot of the times as well, like, I see it just breaks wicks, right, on the higher time frames and just pushes, right? It just goes.
Yeah. So once it re-breaks, once it attempts to break it once and then re-breaks it, like daily breaks of wicks or daily breaks of candles are massive pushes. But just playing the probability game, like, we used to say, like, well, you know, if we get a closure below here, but we know we're going to tap this area, right? Well, let's base our position on, you know, getting our piece to here, and that's it. Now our stops are here, break even, so we shouldn't really come back into that range unless it's a fake out. Right, so you really have a lot of advantages into taking positions before the market has a chance to make a decision whether it's going to go up or down. Where it's made its last decision way back there, like it's been driving, it's a strong drive down. It's not all of a sudden going to reverse here as it's driving. You look, same thing here. It's not all of a sudden just going to reverse because it's driving down here. It's going to give you an indication somewhere on the smaller time frame.
Yeah.
But off of the range, it'll have to at least either bottom wicks to come up then, or a range around here, right, and grab orders. But you're at least going to fill this. Right?
Yeah.
You're going to fill the 44 to 40. How do we take advantage of taking a position into the area where it's going to make a decision? Not wait for it to make a decision and then hop on, but be in already before it makes its decision, knowing the area where it has to make that decision.
So you're telling me Asian has been feeding the people?
Q4 as well.
We haven't lost in Asia. Our last loss in Asian was October 17th.
Jesus. Win streaks all across.
Bro's been eating Q4, man.
Yeah, but you have loads of runners now, right? or you've had more runners than we typically do. So
Yeah, for sure.
yeah, for sure. I think that's something.
There's a good question for you, Elvis.
Which one?
Someone asked, how do you balance, like when doing your trading and working and sticking to a schedule? You know, like how do you balance it?
I would say it's just understanding where your priorities are, right? Obviously, so what I'm trying to balance, like, you know, working, trading, some personal stuff on the side, exercise and whatnot, right? But in general, it's just about where you put your priorities, right? Like for work, yes, I'm going to be putting, you know, most of my priority there. But then if I can, right, and I'm working from home, maybe I can be looking at the charts sometimes. And then when I'm off work, I can choose which hours to spend where. So most of my time is typically blocked. Like, I think Don wanted to grab 5 minutes with me on like Monday, and I still haven't spoken to him yet. But typically, I would say it will take time for you to get into like a proper routine. For starters, I would say, you know, do the things that are highest priority. So for example, if you're working, right, you have an obligation to your employer that you have to work. Cool. That's obviously your 9 to 5 gone, right? Then what is the next thing that you'd like to do the most, right? Is that going to be trading, right? Is that going to be, you know, exercising? What is that going to be? Then slot that in, and then, you know, put one thing after another, and then suddenly you have a timetable, then you have a schedule, right? And then when that happens, you know, and you're used to it, you can start moving, you can like shift stuff around, you know, you can understand what your progress is on everything, and then move that accordingly. But I would say that's how I typically put everything together. And it works for me. It might not work for other people, but that's how I typically do it, I would say. Who asked that question? Did you just find that from?
Zoom.
Oh yeah.
Zay asked it.
Yeah. I don't know if Don's gonna come back actually today.
Yeah, neither. He said sofa, but it was a mattress.
Yeah. Don I still need to get 5 minutes with you, right? To go through the journal. Oh yeah. I was gonna do like a 20-minute thing for the journal today. I don't know if there's anybody who has like journal questions here, but I am happy to go through that. Don if you wanted to ask about that as well.
Journal.
No, I had a quick question about the new journal.
Yeah.
Yeah, let me pull it up here real quick.
Let me pull it up as well.
I think it's always all the way at the end of the journal. The price action scenario, like the more dash VE stuff. I don't know what that means.
Yeah, give me a sec. Let me just get rid of
Yeah.
the annotations. Oh, more negative stuff? Oh, just delete that. I think that's just typically when I was designing the journal, I was just trying to add more like this. I wanted a balance of positive and negative things on it. Like, I think it's here, right? Where you have... Yeah, just get rid of that. I'll get rid of it now. But... yeah, in terms of like understanding, is there anything you don't understand from the journal? I don't know.
No, it's pretty clean. I think that was the only thing, is just filling in like the understand the
I had
closure.
I had a
closures.
fix for this, which I fixed the formulas so that they don't count break-evens, whereas they typically did previously. But for these ones, they were fine. So for those who have already downloaded the journal but don't want to include break-evens into their win rate, then it's probably good to re-download and just copy over.
Yeah, and then you have to do the 23 year for the win rate to populate, and not the 2023 on the journal. Yeah.
When you re-enter with one or two positions, when I re-enter with one or two positions, how do I recalculate them? What do you mean by re-entering a position? Why is journaling good? I think generally journaling, it depends on your personality, I would say. If you're able, if you have like a very strong trading personality already, which is like, you know, you're stoic, you understand, you're logical with your trades, with setups, entries and everything, and you're not very emotional based, then I don't think trading journals will help you as much as, for example, if somebody typically just enters the market off the rip, has no kind of plan to enter their trades, right? So the journal, depending on what stage of a trader you're at, will help you in different ways. Generally, it keeps you accountable for your plan. So once you have a strategy, making sure that your journal reflects that strategy, and then every single trade that you take is in accordance to that strategy, right? And then as you continue to build the journal, you'll see that over time, and you'll get like an actual good quality data in terms of win rates, to see, okay, actually, how good is my current trading strategy? How can I improve this? And so on. But journaling in general, it's for, I would say, like developing a trading habit, a strategy, right? Sticking to your plan, and then there's also like a bunch of psychology behind that. But that's what I would say. You don't have to use my journal. You don't have to use any journal, right? You just, if in some way you're recording your wins and your losses in a way that will benefit you in the future, that's just, I would say, the most advantageous. Yeah, Donwan's here. Don't know if Donwan had
I've been here. I just don't like having to raise my hand to speak.
I can't see you if you don't raise your hand, but yeah, like anything, man. What was the thing that you wanted?
So I got a couple of indications of the journal. One, can you just do like a fake break? Excuse me, John. Can you just do a fake breakdown, like entry for the journal? But a technical question that I have about the journal.
So
you cannot see your overall wins and losses as a whole. It's only per pair. Is that the correction?
Oh, so you want to see the win rate across, overall, right?
Yeah.
Just everything. So I'm guessing you're trading multiple pairs?
If I look at my journal right now, it says I have no losses in my journal, but that's because it's sitting on gold. Okay. I've taken 2 GJ losses.
Right, okay, so you have multiple pairs for losses. I'll try to add something here for all, so you can just look at that. But typically, all pairs, they don't trade exactly the same, which is why I separated it. So, how gold moves compared to like NAS or like GJ is going to be slightly different. So it made sense for me at the time to just have the individual pairs in terms of their win rates. But I can try to add that for the new one, for the next version.
Yeah, because it's like, in a sense, you kind of favor the old playbook. The old journal. Because you can see your overall percentages just in general. Because if you're trading one style, or if you're trading the old playbook, your entry is going to be the same, or your setup is going to be the same regardless. Minus time frame of the structures.
It's just you might find that. Yeah, you just might find that later on, like trading the same strategy with gold compared to trading the same strategy with GJ, you'll have different like it'll trade differently. And like the data might not be the same, but
not at all. Breakout's a breakout. An onion's an onion. A celery's a celery.
Alright, yeah, sure. I'll add it, and if you like the functionality, then go for it. For me, I'll just continue to use individual pairs, but yeah, if it makes sense, then I'll add it.
Yeah, just in a sense of like, if I'm trading the journal and I'm looking at my overall percentages, the percentage on the analyst page on the overall, is that for the overall in a sense?
For these,
like detailed analyst.
For this one,
where your current balance and your current account percentage growth.
Yeah, this is overall growth.
Be for gold.
No, this is overall.
Okay.
Yeah.
Right. Yeah.
I'll make that clearer actually, but
my pip count, like how many pips am I up for the month? You know what I mean? You can only tell per pair.
Yeah, you want it for everything.
Yeah.
Yeah, that's fine.
And then if you want my, just in general, just, fill out a fake trade, it would be beneficial in a sense, because me and Karen went through it, and Karen kind of made it make sense to me.
Yeah.
But it's your journal, you created it, so, if you would like to, fill out a journal right now, it would probably be helpful for a lot of people, and just explain as you went through, even though you have it in the beginning, in the welcome page in a sense. But
yeah, for sure. I'll go through it. So I'm not gonna go through what like day, month, year,
Day, time,
right? Session. I'm
session,
also gonna not go through
pair,
pair.
all
You
that.
can. Okay, so typically when you get to here, right? Session, obviously you have your sessions. You're not like you can add if you want, but typically I think that's fine. In terms of pair, right? If you want to trade extra pairs, don't edit it here. I would say go to your setup, right, and then just add the pairs here, right? And then once you have that in, they'll automatically come up. So, for example, I have NAS, right, or whatever, however you want to spell it, or whatever, right? And then in pairs, you'll see NAS pop up, right? So that's fine. Bias, bullish, bearish, right? Just
Can you
to
explain? I know me and you was talking through text right on that bias thing, because maybe I just want to make sure I understood you correctly. There's no mixed bias, so you know when you was just in a sense explaining, you know, there's no such thing as a buy and a sell. It just depends on rejection of a range or a higher time frame, or if you take if your daily bias is bullish, but you're taking a sell. Do I put bearish because I took a bearish setup, or
I think
should it be like a mixed bias?
Yeah, it depends how you want to use it, right? For example, if the daily is bullish, right? Let's say say you were here, right? Your daily was bullish, and then you took a buy at some point, right? Then cool, yeah. I would say if it's in line with what the structure was at that point, and it made sense that you're trying to continue bullish structure, then yeah. But if you were trading, a local, very smaller time frame trade, and it was bearish, right? Then maybe you would use the journal to reflect that bias for you. All right, so it's flexible in that way.
What do you mean by that in a sense? Like, because I guess you kind of misleading me there, and that's why I asked the question.
Yeah, so there's multiple ways. So for example, the first way you could identify bias is just by the daily bias candle, right? So the daily candle, if it's bullish, if it's green, you're typically bullish, right? But
I normally go off the daily and the 4 hour combined.
Yeah. So in times where, for example, in this closure here, right, you closed respecting all of this. So at this point, were you daily? Was your bias bullish or bearish?
Right now, just off this one time frame, I'm bullish.
Right. Okay. So you're bullish, but you're understanding that you just closed respecting. So at any given point, okay.
The 4 hour. What is the 4 hour doing?
Yeah. Well, like it's gonna jump around, but yeah, like typically.
Yeah, I'm bullish right now. I'm bullish.
Okay. So you're bullish, right? And then if in that case.
Rejects there. Right.
Yeah.
Go ahead. I'm sorry.
Yeah, no, it's all good. So in that case, I'd probably say you're bullish until price probably breaks below some of these, right?
Right.
Right. So once you're potentially breaking below some of these, maybe the daily candle hasn't printed yet, the next daily candle. So you might be bearish in this kind of local space. Does that make sense? So you be bullish, right? If you take trades around these sorts of areas. But once you start breaking below here, let's say you got into a sell somewhere like here. I would say I would probably put as my bias, right? I'd probably put bearish because at that point I'm understanding I'm trying to capture the bearish side of things.
That's basic trading, so I wouldn't be confused there because I would just be putting on a higher time frame. I was bearish. Let's just say this candle that opens up next, just the first 2 minutes, I take an impulse sell on the chart.
Yeah.
Am I going to put I was bearish or am I going to put I was bullish based off the analysis and the data for the journal? That's what I'm trying to figure out.
I would say if you took a sell right here, right?
Right.
I would say you're bullish.
Okay, so you put bullish on the journal.
Yeah, I would put if it was in this case, yeah, that's what I would do.
Okay, that's what I was trying to figure.
Yeah.
Having like a mixed bias in general.
Yeah.
Don will come on screen, Wicks will come on screen and say, I have a mixed bias. We're looking for buys and sells depending on what the setup is in general. But overall, I'm bullish, but they both end up taking sells or something.
Yeah, fair enough.
So I was wondering, was like a mixed bias necessary, or would the data mess up the overall, down the line if you was just trying to, I have an 85% win rate doing this, would the bias make a major difference?
Yeah. I mean, it makes sense. But again, it's relatively flexible how you want to use it.
Okay.
Yeah. But let's just say, right, we just enter some stuff here. Normal pineapple, I'm guessing it kind of makes sense. So it's not like a stacked entry, but for example, if you got into say you were bullish, right? You took a buy here, right? And then price, let's say, came down, right? Okay, cool. I got into another buy here. that would be a pineapple, but your stop loss maybe is the same sort of area. But in general, right, it's still like it's a separate trade concept, right? Because you're not taking the flip anymore, you're taking the wick entry potentially on the daily to go up. So it's a separate concept. So we've identified it as, so in this case, for example, you'd have a normal trade here. This would be your first trade. And when you take a pineapple, you'd enter this as a pineapple. Does that kind of make sense?
Yeah, I got all that.
Yeah, all right, safe. Buy, sell, setup time frame, entry, stop loss, what it's based off of. So like if it's based off of a 4-hour level, 1 hour support or whatever. BE point is where so this is your advantage point, right? So where are you planning to go BE? Like, is that going to be at 10 pips? Is that going to be not your next logical, support and resistance? Or is it, like a wick fill or something? So you can add to these as well if you guys want. Like, whatever makes sense to you, just add an item and then just apply all. But stop loss to break even. So did you move your stop loss to break even? So if it's a yes, then you just tick, right? In terms of managing your time frames, so managing your trade, like which time frame are you managing it off? Typically, I'd say every single 5-minute closure, but sometimes if you've got into like an hour trade, like it was a breakout on the hourly, you might need to wait for the next hour to close. So in that case, your time frame that you're managing it off of is probably the 1 hour, and then how many time frames it made sense on. So all the way from 5-minute to the daily in terms of like the bias and everything. So for example, if it's a 5-minute breakout, right, is it like a 15-minute onion or something, right? Or if is it like a 15-minute fake out or something, or like, what is it? So it might make sense on multiple time frames. So just recording that when you're expecting. So for example, if you got into like a wick entry, so maybe you're expecting the candle to flip and drive. So it's a flip and drive of, let's say, the 30-minute candle, right? So you can just enter it like that. Stacked entries, so for example, your first position here.
I gotta interrupt you, I gotta run.
Yeah, it's alright. Cheers, just for stopping by.
See you tomorrow. Later.
So stacked entries, for example, you got into that first position, right? At the top. So let's say you took one position here. Cool. Then your normal position would have 0 stacked positions and 0 that you closed off at break even because you didn't have any, right? Your second position, let's say you took 2 positions here, then I would say this is your first position. So your first position on the pineapple, there's 1 extra position, and depending on if you close out break even, a 0 or a 1. And then partial closures, just how many pips, how many lots, and why. So that's relatively straightforward. And then after that, it's kind of like win, lots, win or loss, and then the lot size, how much money you made, how many pips that was. The maximum drawdown and max profit pips is, for example, let's say we go on to the 15 or something, right? Let's say we're in a position somewhere like here. Let's say we took a sell, like as this broke this low. So let's say we got into a sell like here, like off of this break of this wick, right? You got a stop loss above here, TP somewhere, I don't know, wherever, right? Generally, I would say your stop loss being here, what is the maximum amount of pips that you were in drawdown for? So that's probably this candle, right? Top of this candle. So how many pips is that? That's going to be 40 pips, just about. And then for this one, your max profit that you've seen, given that you still, let's say you're still in the trade, your maximum profit you've seen is about 100 pips. So I'd put, in terms of here, I would put a minus 40 and a 100. And then why you exit the trade is
So
like...
you need to put minus 40 there. That was one of those.
Yeah,
questions.
minus. Yeah, put the minus. I mean, if you don't, right, it's
I
just...
thought it was like maximum drawdown. And see, that's what me and Karen was going back and forth. We're just like, if it's a maximum drawdown, it's just put the number. You don't have to put the negative. So
I would say, actually, it doesn't really matter. As long as you're consistent with it. If you don't want to put a negative sign about it, it's fine. Because then it'll just reflect here as just the number without the negative. Does that make sense?
right.
It's like, yeah, just however you want to record it, like negative or if it's a positive value, it's fine. Trade exit reasoning. So why did you exit the trade? And you can add stuff here. So examples are, we had a closure that was against the trade, so we exited, right? Potentially our break-even stop loss hit, or the whole trade combined was a break-even or in profit, so we closed off. what time frame you close that off in. So maybe you saw the hourly close. Okay, I'm closing it off because of the hourly closure, which was a closure below against the trade, right? So that would be a pair. In terms of price action scenario, it's kind of like, so what actually happened after the trade happened, or what you could have actually taken. So this is again more of a flexible part of the journal. So maybe TP hit if you just let it run, right? If you didn't hit, if you didn't move your stop loss earlier, then you could have hit TP or something. That's something to record so that in the future you may be able to catch those pips. Or maybe it was just a break even regardless, or potentially it was a perfect exit where you exited right at the tip, and how many pips you would have taken, and what the actual stop loss level was. So in this case, right, let's say you got into a trade here, your stop loss was potentially, let's say, like above, I don't know, this 4 hour candle here or whatever, right? Then that's a 4 hour stop loss. But realistically, where could it have been? It could have been above here, right? Or above here even. So that's probably like a 30-minute or like an hourly high, right? So potentially your previous hourly high. So you could have potentially put it there. So how you would reflect that is just by putting, stop loss, what the actual stop loss could have been, which is the hourly. And hopefully in the future, right, as you stack up more and more trades, you'll find out where you actually can put your stop loss. So maybe like 100 pip stop loss in the future for us will change to like a 30 pip stop loss, depending on structure, right? So that's what we're trying to learn. But yeah, that's basically it. That's the journal, and then you just kind of read a bunch of data in the analysis to learn about your trading style. But yeah, I'll probably do like some sort of like short video on it in the future, but I just haven't had the time for it yet. Let's have a look. Have we had any more questions, guys? How to determine your stop loss for the DonVo strategy, not the old playbook. So so stop loss, I think Don mentioned this in like his first initial question as well. Like, it's all about where does price need to go before it doesn't make sense anymore. So for example, let's say you got into a short position after you got the break of these lows. Let's say you got in here, right? So in terms of structure, what needs to break before the kind of overall trade doesn't make sense anymore, right? So we're looking at overall structure. You've come down, you've broken these lows. Potentially if you start breaking these highs, right, or breaking these highs over here, we could be looking to retest, right? But we're also understanding that once you break past this low, we have advantage points potentially somewhere in this area here. So we're looking to, that's our advantage point, and our stop loss potentially in an ideal world. Let's go for a different example. Let's say you're in this case and you took a buy here, right? A break of these highs. So you're breaking structure, right? You've come down, made a lower low, and then you're now making a high. So you're expecting it to push up. If price then breaks below here, you're probably gone, right? Like, so for example, in this case, you broke below here, you're probably gone. So in that case, our stop loss would go there. It's just market structure then in that case. Oh, you have some journal questions. Time frame alignment. How can I change it to tick boxes, allowing you to juck tick? Huh? Detailed analysis. There is this hashtag name and several rows. Yeah, if you screenshot that and then send it to me on Discord, I can look into that for you. But currently, I cannot. Yeah, Rob, that's essentially what I would say. Like, it's just where the kind of where price needs to get to before it just doesn't make sense anymore, right? In this case, even if it comes all the way back to these areas, right, you haven't broken this low. So I'm still understanding that at any given point, this could be a liquidity grab to continue up, right? You guys, do you ever know bookmap apps? I don't know what a bookmap app is. What? Okay, never mind. No, is the simple answer, unfortunately. Let me just see if Don's coming back. How long have we been going? About an hour.
Yeah. An hour and like 6 minutes.
Yeah, he's texting me at the moment. Bookmap shows where is pending orders or liquidity. I mean, that's pretty useful, but we just don't use that. We just, what do? We just read price with our eyes.
Yeah. We don't use indicators.
Nah. But I think that's probably what we're gonna call it, to be honest.
Yeah. Good idea.
It's been a good session. I am still running the stream later on. So I typically do, I don't know how many people here know, but I typically do a EvolutionDVS live stream at 10:30 p.m. London every night from Sunday night to Thursday night, just to kind of do a daily breakdown analysis ahead of the week. So if you guys want to join that and ask more questions, sure. But I think we've answered quite a few questions today. So yeah, that's about it, I think.
Over you.
Yeah, cheers for joining, guys. Sorry about the technical faff and all that.
That's no good. We'll have to sort that out for next time.
Yeah, for sure.
Jackson will be IT support next time.
No, don't
I
worry
can't
about
wait.
it. We've been here for a month.
Get the streams running in December. But cool, yeah.
Get the Christmas one ready now.
How was your weekend, guys?
How's our week been? It's happened to there. Q4's been a bit slower for me, to be honest, than usual.
It's been
That happened last year as well for me. Same thing.
I don't really see all the kind of like Q1, Q4 like differences. I mean, I've only been trading this 1 year, so maybe not yet. But
Yeah.
who knows? We'll
Yeah.
see.
No, I've noticed that. Obviously, it doesn't really. When people say don't trade Monday, don't trade Friday, I don't see like why you shouldn't trade it a certain day. I just what I've noticed on the journal, that's just been a bit slower.
Yeah, well, we still have like a month and a half. So, are you guys taking
Yeah.
any breaks around December time?
I don't really take breaks, to be honest. I only want to go on holiday.
Fair, yeah. Because I'm going on holiday towards mid-December all the way to like early Jan. So, well, I'll be back after that. So we'll see how Q1 does next year.
Yeah, that'll be interesting.
Cool, guys. All right, cheers for joining up. I'm probably gonna end it here.
Peace. Take care, everyone.
See you guys next Monday.
Bye.
See you guys. Cheers for joining. Yeah, for everybody on the YouTube, thanks for joining up as well. Yeah, peace out. And if you guys are coming to EvolutionDVS stream later for the analysis, feel free, right? If not, have a good day. And hopefully you'll start your week strong with a Monday morning stream with DonVo. But yeah, cheers for joining up, guys, and I will see you guys next week. Peace.